Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
We are seeing the Taiwanese index is trading lower by almost 0.3%.
Bank Nifty, 12 straight sessions, positive closes, no signs of a reversal yet.
To the conclusion based on facts that there is no allegation, that the allegation made is totally without any substance.
It's a flat opening. The Nifty opens down 5 points at 25,417.
Looking for opportunities to really de-risk their supply chain from China.
111 points gone on the Nifty as we speak.
Renewables is certainly something that's very attractive for us.
Be one or two more senior people coming in. There will be one or two more people coming in.
Supreme Court to help with a possible solution to the Vodafone Idea issue.
Yes, it's an 80-point downtick that we're seeing currently.
Okay, the market just taking a bit of a break this Friday after galloping higher on all the prior 4 sessions. Actually, it's been 14 sessions, right? I mean, today is the 15th, and we're down a little bit. 90 points, 25,330. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel and Reema here with me. Guys, good afternoon.
Hi, afternoon. Just a minor correction. On Monday, there was a little bit of profit booking. So that snapped that winning streak. So for today, we're up about 1% for the week, and we've snapped that 3-day winning streak. So Tuesday, Wednesday, Thursday were positive sessions. But I think while we're down now in the red, there has been a bit of a lift in the last 30 minutes.
Well, that's right. No, I mean, par for the course, right? After the kind of rally that you're seeing, taking some money off the table, you have a weekend as well ahead. Go ahead, enjoy the weekend, I guess. Some money off the table, yeah. I don't think it's a worry at all.
No, absolutely. And, 100 points is what? I mean, 0.35, 336 odd percent, right? I mean, on a larger scheme of things, the market is down 1,000 points. Nifty Bank is down 0.5%. The small and the mid cap index, maybe it'll come up on your screen. It's unchanged, the small cap index, and the mid cap index is also unchanged. Wow. Nothing actually literally unchanged from yesterday's close. Let me just quickly run you through what's coming up here on the program. And then we'll pick up from there. So week trade on Dalal Street, stocks are slipping with Nifty, of course, below 25,400. Financials, FMCG are leading. And there is, of course, the mid-cap space, which is doing slightly better, but is flat, as I said. And a boost to Vodafone Ideas hopes for some relief on its AGR dues. The Centre tells the Supreme Court that it is not opposed to Vodafone Ideas' plea. Well, we have a discussion planned and lined up right next after this. And we'll tell you what this means, because there is some confusion whether this should be actually read as relief for Vodafone Idea, because it's important. Keynes is under pressure. The company announced the resignation of its CEO. And stay tuned for the excerpts of the management commentary on succession plan, etc. Adani Group stocks in focus. There's a clean sheet from SEBI which came through yesterday evening. Yash will tell us more about that. But how should you position yourself at the last hour? That's the question. Mitesh is here to answer that for us. Mitesh, what's your recommendation?
Good afternoon, Prashant. So, I was talking about the possibility of any intraday decline as a buying opportunity. I think we're right there. 25,300 is what I suggest is a good level to take some and explore some long positions. 25,300, 280 being the buying zone. And keep a stop below 25,230. I believe that there's a good chance that the market will head towards 25,500 and then 25,650. So these are the upside targets. And therefore, this pullback gives you a chance to, explore fresh long positions on the index. Coming on stocks, I have buy calls on IRCTC. Buy here with a stop at 725. Look for targets of 760. And Divi's Lab, pharma has been something which I've been very positive about. So Divi's is the next stock. So it's going to good upside breakout today. Buy here with a stop below 6154 for targets of 6310.
Okay. All right. Just one more stock, Mitesh, if you could give us your view. Paytm. Stock suddenly saw a sharp fall. It's actually had a very, very good run from the recent lows, and everyone called it a peak at 800, 900, 1,000, 1,200. But it had a knee-jerk reaction, and it's recovered a little bit. On the charts, how's it looking?
I think, there's a problem that I have put options of bearish positions over here. So we'll refrain from commenting. But there's some kind of a breakdown which is happening in the chart. So the outlook in the short term is negative.
Any Adani Group stocks where there is a trade?
So the entire pack looks very good. In fact, we have had some buy calls on Adani Solutions, Adani Ports, etc. But after today's gap up, I think what still can be bought is Adani Ports. It's hit the highs of 1460, which was where the stock had, had made multiple highs in the month of July and tapered off a bit. But the structure is very positive. So if you get it closer to about 1420, which is about 10-12 points lower, I think that will give you a very good entry point. The first target will be 1460, but I suspect eventually the stock will get past these levels and head towards 1525, 1530.
Okay, best way to play is through Adani Ports technically. But let's get to the other big story. The Supreme Court has deferred the hearing in the Vodafone Idea AGR dues case to the 26th of September, 1 week from now. Ashmit is here with more details on what transpired in the court. Ashmit.
Well, major relief coming in for telecom player Vodafone Idea. The government batting squarely in defense of Vodafone Idea, asking for support for indulgence of the Supreme Court to bring about some form of solution to this Vodafone crisis. This is the first time that the government is openly rooting for Vodafone Idea, citing its own status as an equity shareholder in the company to as high as 49%. Now, this is not the first time that Vodafone Idea has filed a petition seeking relief as far as AGR issue is concerned. What is different, however, is the stance of the government. Previously, the best that Vodafone Idea got, like in the month of May, is the DoT, is the government being neutral, neither batting for or against any such relief, leaving the matter to the wisdom of the court. And as we've seen previously, the court had rejected previous such applications. Now, however, for the very first time, the government is squarely batting for relief, saying that they are equity shareholders. The facts on the ground have changed, that the situation demands some kind of solution, some kind of intervention, that the government is willing to work on some form of solution to address this issue of Vodafone Idea. The concern, of course, being that Vodafone Idea is a part of its petition saying that if this relief is not granted, it will threaten the existence. The company will go under. So clearly, relief being asked for by Centre in favour of Vodafone Idea. The Supreme Court for now willing to hear the DoT, willing to Vodafone Idea further. The hearing, we understand, will resume next week on Friday.
Okay, Ashmit, thank you very much for that. The stock has come off from the highs. It's still holding up with a gain of nearly about 7%, but a little bit of a cool off from the time when the news was announced. I mean, the fact that there is no outright dismissal by the Supreme Court should be read positively. But whether the company is saying that, the government is saying that we're okay with, we're not opposing a relief only on the 9,450 crore plea that was in front of them, or are they even open with it for the larger dues, which are in excess of 50,000 crores? There are lots of question marks to see how this plays. The government is an invested party. They have a 49% stake in the company, and relief we'll have to see in what form. There are multiple ways. One, maybe the moratorium can get extended. Two, even the timeline for payment, I think they have about 5-6 years from now on. By March 2030 or March 2031, they have to make the payments. Maybe they can say, you can extend the payment. Don't give a moratorium, but extend the duration for which the payments can be done. Maybe the government looks at converting more equity, more of the dues into equity. So relief, if the government wants to push for it, can come in different forms. So we'll have to wait to see. But for now, Vodafone Idea is hopeful. Shareholders are seeing a bit of a relief with the stock surging close to about 7-odd%. But outside of that, on the mid-cap end, I think the big theme this week has been these consumer tech companies. Look at Urban Company. 103 was the issue price. Bumper listing on Wednesday, stock closed out with a 60% gain. And today it's added on another 8-9%. So Urban Company is a big high flyer. Swiggy is seeing buying now. Swiggy is up 2% this week. It's rallied close to about 8-odd%. And I think Eternal too is inching up and pushing up. Mitesh, can't give a trade on, Urban Company, very short, listed life. But on Swiggy, Eternal, any trade?
See, Eternal has had a very good run up, And I think now, looking at the fact that the price is also getting slightly overbought, I think I would want to see some correction. Though the charts are very good because the stock is making new highs continuously. The medium-term charts are good, but in the short term, we are seeing very overbought levels. So I think Eternal, I would want to buy it if I get it closer to about 320 or so.
320 is a good buy level for Eternal. Gurmeet Chadha, managing partner and CIO at Complete Circle Consultants, is now joining in. Gurmeet, what's the right valuation for a company like Urban Company? Top line is at 1150 crore. They've just broken even right now. The potential is huge, but the company has to still capitalize on it. Valuations have crossed 25,000 crore. So what is the right valuation according to you? Fair one.
Hi, Rima. Very, very difficult to put valuation to these some of these new age businesses. Also, some of they broke even more largely on investment income more, and I think the operational burn continues. So obviously the stock has done well post listing, excellent premium. But as I said, we are more anchored where we see more visibility in terms of the environment we are in, growth along with some profitability metrics. So we like Eternal. I think Swiggy also has some catch up to do. We like Nykaa, we like Policy Bazaar, PB Fintech. We have added Paytm at much lower levels. I think at some point of time from lending, I think UPI monetization also will happen in the near future. And I think they've got their focus right now. It's just the lending and payment system versus too many things they were trying to do. And Geo Finance, I consider it as new age and as platform as anything else. Urban Company we haven't added yet, but happy to change my view if things become better as we go along.
Gurmeet, one feature we've seen good afternoon with all these companies, right, is these, and maybe it's true with IPOs as well, but just the cohort that you and Rima were talking about, which is look at Zomato. After listing, there was a big dip, right? After Swiggy, same thing. Did well for a while. There was a big dip. I actually went back and looked at, I'm looking at Policy Bazaar, listed in 2021, right? Yeah. Listed at about 1150, 6, 7, 8 months down the line was at 400.
Yeah.
Right, and then of course it had a move. So, these are all new age companies with early investors in and who've ridden the wave higher in the private side, now coming to the market on maybe slightly juiced up valuations. So, any lessons for Urban Company? People looking at Urban Company. I'm not suggesting anything. I'm just asking you.
I think, you have to make a portfolio for them, Prashant. Look at, for example, I'm going a little stretching. Look at NVIDIA and Intel now. Intel was what, $150 billion 10, 12 years back when NVIDIA was what, 5, 6 billion. Today, NVIDIA is buying a stake in Intel. Intel has, the government has infused equity. Blinkit has disrupted a 30, 40-year-old business, DMart. And we saw Mr. Damani picking up a stake in Eternal, now amongst the top 10, 20 shareholders. Right, so I think so. I'm not saying it is a spray and pray approach. But
no, Gurmeet, sorry. I should have made my question sharper. My point is, do you buy after a substantial dip in some of these names after listing? You buy only then and not chase them higher in the first few days. That was the question, the sharper.
Yeah. So, Prashant, as I said, if there is improvement in operating metrics, then even buying during IPO, immediately listing is okay because you're taking a long view on this. You're not taking a tactic. I agree with you on the volatility bit. Same with Paytm also. I mean, went down to what, 300, 400 when RBI put a ban. So, if there is a sharp dip and there is some value play, you can be tactical when you buy a dip. But to be structural, you got to see quarter on quarter sequential improvement and burn getting lesser, operational profitability picking up. So with Urban Company, Eternal, we also entered late. We actually entered at 170, to be honest. We didn't buy during the IPO. I could not add during 50, 60. But that's when the platform fees kept going up. When Blinkit started, adding more dark stores, and people thought it is cash burn. I think it's a capex. So if HUL sets up a plant, it's capex. Somebody sets a dark store, can't be cash burn. So you have to see, take a view. And there's a bit of a leap of faith, I'll be honest. You can't really put traditional metrics to work. So have a 5, 6 stocks in different segments and hope that, a couple of them take off and, make up for the others which don't.
Okay, one question. Do you own?
A viewer has just messaged, analyst by the way, says that the broader point is right, but Diwali is coming and Urban Company services Zoom. Demand for Urban Company services Zoom. It's a good point, I think. I mean, you're right there. Sorry, go on.
Yeah. The difference between a Zomato and even an Urban Company is that when you have a salon service, right, you will call them once a month, maybe, right? For Diwali cleaning, it's once a year. But a Zomato, on the other hand, you can call groceries like every day, or a dine-in can be once a week, once a fortnight. And even in terms of asset light, Urban Company is just Zomato is a platform. All it owns is people, right? Ferrying food. But Urban Company, on the other hand, is a little more asset heavy because it invests in training. So that's the difference between the two.
Training, by the way. For example, if you were...
and they have some minimum guarantee. Yeah, sorry.
There's a minimum guarantee, but for example, the Palo chaps, right? You got to buy the product from them.
You have to buy the product from them. But that ensures quality.
Also, exactly.
That ensures quality and the fact that, consumers go back, clients go back for stickiness. But Urban Company is a monopoly in the organized space, at least for now. And now they're tapping into InstaHelp. And when we asked the company about the opportunity, he said $10 billion is currently the serviceable market for InstaHelp only. But Gurmeet, a quick question. Do you own Urban Company?
No, as I said, we have Eternal, we have Swiggy, we have Policy Bazaar, we have Geo Finance, and we are now we have added Paytm recently, a couple of months back.
Okay, got that. What about Reddington? Stock up 5% today, 25% for the week. Lots of excitement with this Apple 17. We're seeing visuals of people falling over each other to get their hands on the new phone. But is it really a big deal for Reddington?
Could be. There's a bit of a probably effect when the overall space does well. We've been very lucky with Dixon. We have been lucky with Keynes, notwithstanding the resignation news today. So those are the two ones we have in our portfolio. Keynes is also quasi-semiconductor OSAT play as and when payout. So I personally think that if you're going for EMS, look at companies which are increasingly adding more ODM versus OEM and adding some IP to it, because that will give you a bit of a cushion, as things pan in a volatile world where, you can see sudden changes in policies and tariff barriers coming in. So anything to do with IP, anything to do with ODM, where you are increasingly adding more margin to makes more sense. So we actually trimmed Dixon probably much earlier than we should have, but we have Dixon and Keynes in that space.
Very quickly, in the past you've spoken about the defense plays. I think Zentech was something that you like. I'm not sure whether you'll have it. And the railway theme as well. I think Hind rectifiers. Do you all continue to remain bullish on both those two? I mean, have you all changed things around from there?
Oh, Nigel, extremely constructive. I think defense tech, and I've said this earlier times, I think you'll probably see one or two defense companies being the top nifty companies in next 3 to 5 years, and maybe one of them or two of them hitting 400, 500 billion market cap. And I think this space is merging into more technology now. And as I said, more IP related plays. So we have Zentech, which amongst, has the highest patents amongst all Indian companies. I think they have 24 patents. Simulators, for example, which is one of their bread butter, GST has become zero. India still has almost 80% physical training versus West, which has 70% simulators. And simulators have application beyond defense, aerospace, and related sectors. We added Hind rectifier in the railway, which makes transformers for railways. And now they've done an acquisition through a subsidiary, a French company. Just for 1 million, company does 24 million euro top line. They've acquired it under Chapter 11, but they get the IP in terms of robotics and electronics. So you suddenly get a global footprint on power, on electronics, and not just being transformers and propulsion suppliers to locomotives. Also, the current engines are no longer one engine dragging 18 bogies. It's step-up engine, whether you see Vande Bharat or you see Shatabdi, etc. So that's something we've added. And we're also looking at more space, more companies in the power equipment space. That's something we are extremely constructive.
Okay, so Zentech, Hind rectifiers also is something that you're now. And solar, of course, was your big bet when you got in triple digits, right?
Yeah, we were in 3 digits in solar almost, and I think got lucky there. Also, I think with Mr. Chandra visiting solar plant is very significant. Tata Sons chairman. I'm not speculating anything, but I personally think there are big JVs with large corporates will come because defense needs a lot of capex,
right.
IP and capex.
Got it. Thank you, Gurmeet, for joining in. Enjoy your weekend. Let's talk about Vodafone Idea and whether one should really read into the government statement at the Supreme Court. We're not opposing the Vodafone Idea plea, but some solution is required. The government is also an equity holder, 49% stake. Shiju PV, Senior Managing Partner at India Law, is now with us on the show. Thank you for joining in. Share your first comments. Were you a part of the proceedings?
I'm not a part of the proceeding. My first comment would be a welcome step from the government side, because this has been a long overdue, and this is third or fourth litigation going on in this matter. So it is an opportunity for the government to see more than a litigation, to come up with some proper policy framework, which is the need of the hour.
So should we expect some relief is coming from the government?
Yeah, government currently already holding, as you know, it's already a 49% government holding, and any change in stand or change in policy stand of the government should be applicable to the entire spectrum, entire sector, not just to Vodafone Idea. But looks like there is a different view. One is DOT's demand, all issues coming out of the fresh demand made by the DRT for around 9,500 crore. And a part of that amount, the demand also goes back to the 2017 year period, which was already crystallized by the 2019 order of the Supreme Court. So seems like there is also another view from the government, since there should be some policy correction, there should be a revisiting. So I expect some kind of a change in stand by the government in the next week.
Gopal Jain, senior lawyer at the Supreme Court, is also joining in. Mr. Jain, would you read this as a change in stance from the government? Because the government has taken steps to resuscitate a Vodafone Idea. You know, first it was an entire policy which provided relief in the first place 4 years back. Then they converted some of their dues into equities, which is why they have 49% stake. So what has changed right now, in your mind, based on what's happened today, from the government's point of view and the stance? Mr. Jain?
So first, I think it's a positive step because we are in an era where resolution is very important. Issues should not be simmering. All sectors need stability. The telecom sector particularly has gone through a lot of upheaval in the past. Second, I think we should wait for a week when the government will come up with its proposal or plan of action to be able to be tabled before the court and for further discussion. And three, the very fact that the government has itself now infused equity by converting the loan into equity makes it a stakeholder. So to that extent, it's wearing two caps. And perhaps it's in this context that it is going to come up with some constructive formula or suggestion or practical way forward to address the issue. So I read it overall as the sentiment is positive. And if matters can be resolved, I think that will be a welcome.
But Mr. Jain, the government has converted its dues into equity a while back. Despite that, you know, the recent Supreme Court hearings, we haven't seen, you know, have been dismissed by the Supreme Court. I may be wrong, but it just appears that it's not that the government has just converted its dues into equity. It's been a while. So, and yet from the Supreme Court, we haven't, I mean, whenever the government has, you know, made its plea, we haven't heard this kind of language.
It's not a timing issue. As I said to you, if you go with resolution in mind, like today when we have a mediation act, the idea is to resolve matters. So I think it's always good for a policymaker to come with a constructive suggestion before the court. And then once the suggestion is placed before the court, we will have greater clarity. And then one can discuss what that proposal is and how viable it is and feasible it is. So I think we should do it in two steps, but it's a welcome move.
Yeah. Mr. Jain, good afternoon. Thanks for joining us. You know, my question is for the not very deeply those who are not following this very deeply, what the government lawyer said in court today, how is that different from their stance earlier? Because, I mean, they said in court that, you know, the position has changed. I mean, the situation has changed. So just wanted that. How was, you know, what was this position then and what is the position? What is the new position now?
You're asking me?
Yes, Mr. Jain.
Yes. No, I think I would look at it the other way around. I would look at it that the government has told the court, look, we are going to come back with something for your consideration. So please defer the matter to a week from today. What that proposal is, as I said a few minutes ago, once it's stable, we'll have greater clarity on what it is. And the change, as I've indicated earlier, was the fact that it has itself converted loan into equity. Perhaps it also thinks that the sector needs three viable and strong players. And there could be a variety of such factors which the government as a policymaker could consider, while it's also donning the cap of a quasi-stakeholder at the moment. So I think the most important thing is the positive intent shown towards moving forward and resolving these issues rather than letting these be open-ended. I think that's the message that I take away from today's hearing and the suggestion made by the government.
So I'm not asking you what we should expect in terms of a proposal from the government, but typically how will this work? I think, Mr. Jain, if I can bring in Shiju as well, I think he wants to come in. Shiju, go on.
See, there is clearly a change in government stand. In fact, see, the government changed the earlier dues into equity quite some time back. But earlier petition came up, it was predominantly a DOT view was going on in the government side because we have the sovereign due is pending, we need to collect it. But it's been some time that discussion happened, a lot of petition, and now government also thinking two things, multiple discussions, multiple thought processes going on government's mind. One is the duopoly issue. There is already a lot of debate happened. We also had earlier debate regarding how a telecom infrastructure sector, already we have an issue in airline sector. Similarly, in telecom sector, how bad it will be a duopoly. That thought process is already a lobbying is happening on that side, in government side. Similarly, another side, government also holding a stake. Now it is also not just a DOT interest, it's also a government stakeholder. So there is a change in policy now, government considering only take the money or a due sovereign due only. It's also now thinking from an overall perspective, how to save the sector as such and how to streamline the revenue. So I think currently the way now the GST regime is changing, similarly, I think this policy side also, there is a change in thought process. A policy decision might be coming.
It's also, as you said, the timing of it, right? The 4-year moratorium for which Vodafone Idea has to start repaying the AGR dues in installments is up in March 2026. So maybe so far the government had a hands-off approach saying that the company Vodafone Idea will be able to raise the bank debt or external form of funding, some QIP equity fundraise. But since that is not transpired and the deadline is now approaching, March 2026 is when Vodafone Idea needs to start repaying the AGR dues after the 4-year moratorium comes to an end. Since that is approaching, they have very little time. So it's, we've just come to the threshold. It's do or die. Mr. Jain, would you like to make some final comments?
No, I think, as I said, let's wait for a week to have greater clarity. And once we know what the package on the table is, I think we can have a more informed discussion on that. Otherwise, it would be kind of speculating at the moment. But I think the intent is positive. That's the takeaway for today.
Intent is positive. And Gopal, Mr. Jain, what Shiju said, right? So far, the differentiation he made is that, according to him, so far the government was following the DOT view that we need to collect these dues. And now that seems to have kind of changed a little bit. Would you go that far?
And like I said, this would be second guessing something. So it's much better to know everything before commenting on it. But yes, always taking a wider sectoral perspective, a holistic view of things is always a welcome set. Practical, pragmatic approach always wins the day.
No, 100%. Only thing is, after so many, days in the court arguing one side, it'll be interesting to see how they kind of.
As you said, the first time they've gone ahead, they're going to approach with a resolution in mind.
You can treat it like a second innings in a cricket match.
Absolutely, and I think that's well put. Shiju, you want a last word quickly?
Yeah. So I have been telling much earlier discussion also, where government has to intervene with a policy decision, it has to act with the policy. A court proceeding should not be used for a policy as a replacement for policy. Finally, I hope government will come up with a final policy in this regard to save the sector.
I remember that last conversation where you made that point. Gentlemen, thank you very much for joining in, both Mr. Jain and Shiju. Get into a break on that note with the news that the Nifty is still down about 65 points. On the other side, Tushar Pradhan will join in.
Welcome back. Well, markets actually have seen some kind of recovery from the low point of the day. So we were down more than 100 points at the lows of the day. Decent recovery, not too bad. I think a couple of, heavier stocks. Even the Nifty Bank actually has cut its losses. Axis Bank is a stock that's fighting back quite strong. And RBL Bank as well. That's another one that I think you should be keeping on your radar. Probability of it moving out of the F&O ban. I'll tell you more about that in just a bit. But we've got Tushar Pradhan, a director at Hexagon Partners, who joins us on the show. Hi, Tushar. How are you feeling about the markets? This 1,000-point rally has come out of nowhere. It's been a bit of a left-out feeling, actually, for many on the street because things were not really looking up. The economy is still very, very soft. But suddenly it seems bulk of the street is betting on a big recovery in the second half of the year. Going by the rate cuts, going by the stimulus measures that we've seen, and GST 2.0. How are you feeling about the markets?
I couldn't agree with you more, Nigel, because I think whatever we needed to really see from a policy perspective, what we wanted to see from an interest rate perspective, I think all of those things are already in place. I think what was missing probably all throughout into the year was an earnings pickup, which we did not see in the last quarter of the last financial year. We did not see in the first quarter of this financial year. And what we're hoping to see a little bit of an inkling of in the second quarter of this financial year. We should see the numbers very soon next month. But I think the big move in earnings growth should come in the third quarter, which should end in December, which is just after Diwali. And that is really when we'll see the bulk of whatever the expectation is, whether it's delivered or not. And of course, the busy season comes in the fourth quarter of the financial year. So I think what we are heading for is that the environment has been prepared. Now the delivery seems to be the one which is lacking. And I think that is something that the market will take a cue on as soon as we see some of the results coming in next month for the second quarter of this financial.
Tushar, hi, afternoon. This is Reema here. In the morning we were talking to Dheeraj Agarwal of Ambit. And he was saying that, we were just discussing how markets have been sideways. And he's like, yeah, this is a themeless market. It's all about individual stocks. And he says, this reminds me of the period, I think of 1994, 95 to 1998, a 4-5 year period where the index did nothing, but individual stocks. That's what made you the returns and the alpha. And he also went on to say that you will see a pop now. If we do get a India-US trade deal, etc., markets will do well. But generally, he expects only a mid-single digit kind of returns for the next few years for the Indian markets. Would you be in that camp?
It's an interesting question. And I think there is some validity to, kind of agreeing with that. And I'll tell you why. If you look at stock market ownership, and I think we're talking about the top 20 stocks across, the Indian spectrum, you will see that almost every portfolio, whether you take it as a mutual fund, whether it's an FII, whether it is a PMS, whether it's an alternative, any portfolio, you will find them chock-a-block with the top 10 companies, whether you like them, whether you don't, because they're all reasonably priced. Now, the problem is that unless there is a significant uptick in the demand for these companies over and above their current holding, and in other words, I'm saying they're overowned, it is very unlikely that these stock prices are going to move anything else except for strong earnings growth. And as we all know, the large companies are not going to grow at double digit. They're probably going to be low double digit or kind of up to high single digit. Now, that doesn't give you a confidence that the market as a whole is going to go up because these companies are likely to now not really have any PE re-rating left into them. Having said that, I think the composition of the market, of course, can change. There are companies at the lower end of every index, which is what we call as the tail of the index, which sometimes gives some impetus to the exchange itself. And that's where we are seeing actually some of the mid-cap indexes and the small-cap indexes continue to do well because they're not so weighted so much to 1, 2, or 10 or 15 stocks. They're across the spectrum. So I think when we look at a market, we need to kind of dissect that and to say which market are we talking about, which index are we talking about. So if you're talking about the Nifty 50, I would tend to agree with your sentence that maybe because of the large companies within the Nifty being so, I would say, over-owned across every portfolio, it will take something really special to move them significantly higher. And as a result, the entire market will be a result of that. So one would tend to agree. But I would not disagree also to the fact that there are significant individual stock opportunities that one should be looking at. And I think that is clearly where the alpha will come in. And I think there is something to be said for active management in a period like this, where most of the large caps are part of the index and they're partly owned across most portfolios in the market today.
Okay, all right. Tushar, I was looking at the holding, the FI holding, and on the whole, they have been very, very underweight. But if you look at sectors, they're holding in IT, that's come down to, I think, around 7.2%, which is, the lowest we've seen in multiple years. And the tech index, as it is, has underperformed. Now, suddenly, the kind of soundbites you're getting from the Globe, valuations, various other arguments are that things could start bottoming out and there is some interest that's coming back. The good part for them is they have clean balance sheets and, the dividend paying out, the cash, cash flow yields as a percentage as well looks pretty okay. Do you think you would start allocating gradually to the tech space?
I think when I look at tech, I clearly make a distinction between the large tech, which is the Wipros, TCS's, Infosys's, of the world, where they are in a different space altogether and they are largely led by the kind of offshoring of and the outsourcing volume that we get from the US especially. But when we look at mid-cap and small-cap IT, I think that is something where it is very interesting from my perspective. Because the large caps are largely going to follow the overall trends of outsourcing in the market, and which is where the question mark is. First of all, in terms of growth, because they already are at such a stage that significant double-digit growth from here on seems very difficult to achieve. On top of that, there are pressures in terms of the economy. Now, we just heard that the Federal Reserve has cut the interest rate in the US, which is signaling some softness in the unemployment figure there, which again tells us that they are either bracing for some sort of maybe a flattening in the economic growth perspective. So if that happens, again, there is more pressure on the larger caps IT businesses in India. So I think there is many probably spanners in the work here to kind of make a very clear, distinct positive for the Indian IT space. And I think that is being reflected in the lightening of the FII portfolios. Now, if you say that if that period of lightening is over and should we look at it back again, I think that should again be circumspect with the kind of expectation of return from here on. So you might get a little bit of a spike, but it's nowhere near going to be something what people should expect from the mid caps, especially in the IT space.
Thank you, Tushar, for joining in. Enjoy your weekend. Let's get back to the markets and talk about individual high flyers, big movers. By the way, the Nifty is grinding lower now, closer to 25,300 now, more than 100 points down. But talking about the big movers today, Hormis is here with that exciting list.
Hey, coming down to the end of the week, so we thought of doing some weekly movers, but then the list of daily movers was a lot more exciting. So we stuck to the daily ones today. Starting off with some of the top gainers from the broader markets, Orchid Pharma is locked in a 10% circuit. It's the biggest single day gain that the stock has seen since August of 24. The volumes are also the highest since May. And you take a look at the volumes, we've been mentioning this over the last couple of days that the movers in the broader markets have moved on very, very strong volumes, and here's no different. 12.5 lakh shares traded, 20-day average is only 65,000, and despite this 10% move today, the stock is among the worst performers on the BSE small cap and is down 55% so far on a year-to-date basis. Hexacom Tele is the other one, 14% higher on this stock. This is also the biggest single day gain since April of last year for the stock, the third straight day of gains. The volumes as well on the higher side, 57 lakh shares have already traded. The 20-day average is only 3 lakh shares. And after this move, the stock is exactly at its 100-day moving average, which is placed at 164, so an important level in sight for Hexacom. And of course, after this 3-day up move, the stock has also crossed its IPO price of 142. On the downside, Bulgaria Industries, but The interesting bit is not the fact that the stock is down 4%. The interesting bit is the fact that the stock at one point was up 15% at the start of the trading session. So the stock has almost cooled off 20% from the day's high, and it has turned continuing to grind lower as the session draws to a close. And take a look at the volumes here as well. And despite on strong volumes, of course, with 4 out of the 5 days this week, the stock has been on the losing front, and the volumes at the highest since August of 2024, with more than 20 lakh shares have already traded hands, close to 25 lakh. The 20-day average is only 73,000 shares, and at the day's high, the stock was moving above all key moving averages, but now it has broken below its 50 and 100-day, and now it is right at its 200-day moving average, which is at 182. And the last one on the list is Anup Engineering. The stock is up 10% today. It's gained in 3 out of the 5 trading sessions this week. The volumes have been on the higher side in today's session. They're set to be the highest since May of 23, and 11 lakh shares have traded today. The 20-day average is only 17,000 shares. And of course, the stock at the above its 50 DMA, and the next one on the upside, the 100-day moving average, comes close to 2650, is down 30% so far this year, but not before the fact that it has moved over 150% last year and has more than tripled in 2023 as well. Back to you guys.
Okay, all right. Thanks a lot for that, Hormuz. So we'll slip into a short break. On the other side, we'll get you some trading calls. A technical expert will be back with us.
Welcome back. Watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. We've got about 15 minutes to go to wrap up the day and the week, and Mitesh is now back with us with a few closing trades. Mitesh, slipping a bit. Would you buy at this 25,300 mark?
So actually, around these levels where I want to take a long the index. This is what we haven't done the lesson. But the idea is to use decline to buy into stocks and indexes. So I have two VTST calls. Mankind Pharma is something which is near the day's high. So VTST here with the stop at 2644 for targets of 2680. And Steel Authority of Sale is also near the day's high. That's BTSC as well. Keep a stop at about 135 and a target around 138 can be looked at.
Okay. Thank you very much for that. Let's address before we get to the F&O desk, let's talk about Kaynes Tech. The stock is a bit subdued in trade after the company announced the resignation of its CEO. We had a chat with the CFO, Jairam Sampath, and he will tell us what the road ahead is.
Discussion with me that he wants to move on to Bangalore and that we would like to keep our headquarters here and our major operations are in Mysore, so we would like to do that. So it has been friendly discussed and then well planned and done. There will be one or two more senior people coming in. There will be one or two more people coming in who has been with me for a long time, and then some people who have been with me for last 1 year, say around 8-9 months, who has been working along with me to take this position. So we have enough internal people who have been working as backup for everything. In another 2-3 days, it will come on.
Okay, Amrish Valika is also joining in for the last leg on the show. Amrish, first a quick word on Kaynes Tech. The streets seem spooked, but it managed to recover and it looks like there will be an internal candidate as a CEO. They have been in discussion with a few and we could hear the name very soon. I mean, all concerns allayed?
As of now, it seems to be, but I think we'll have to wait for a while for the final appointment. I think that's what I think that's when the serious investors will again start looking at it.
Okay. And this Vodafone idea, should we read too much into what transpired at the Supreme Court as a lifeline possibly being thrown? I mean, based on what we've heard, would you buy a Vodafone idea even as a tactical punt?
No, I mean, see, based on what's come out now, I mean, clearly, I think there would be a lifeline because I don't think the government can afford to have just two major players. So the third player is important. So from that point of view, I think Vodafone would get that lifeline. But for an investor, it doesn't make sense because for an investor, a long-term investor needs to see as to when the profits will come. And I don't think we would see major profits coming from Vodafone, at least in the next decade, if not more. So it makes sense from a trader's perspective, a risky trader's perspective. Maybe one can, I mean, in case this thing is settled, then possibly we could see levels of about 12, 14 or whatever it is. I really don't see the stock going much beyond that. So for an investor, it's a clear no. It's only for a trader who can take risk.
Okay, that's the call coming in on a Vodafone idea. What about any of the Adani Group stocks? Big relief coming in, the SEBI dismissing all the allegations of fraud, related party transactions, etc. in the stock, in the entire group. Stocks have done well today. Look at Adani Enterprises, 5.5% up now by close. Would you be a buyer?
So basically, again, out here across the group, the stocks have moved up. It is clearly a sentimental move because of the SEBI notification. But then again, as an investor, one needs to look at the fundamentals from a longer term perspective. And from that point of view, I would be a buyer only in Adani Ports for the time being.
Even technically, Mitesh was saying Adani Ports perhaps is best placed if you want to take a trade. Amrish, do stay on. Nigel has moved over now to the futures and option desk and he'll give us the latest trends.
Well, today the markets have taken a bit of a breather and the Nifty Bank in particular, after gaining for 12 straight sessions, has taken a bit of a break. But if you look at the future space, well, there is unwinding of long positions clearly that you're seeing on the Nifty Bank. So the index is lower and the open interest as well has come down substantially. On the Nifty options pack, well, two strikes should come up for you on the screen. There is some writing that we're seeing at higher levels. At around the 25,400 call, just take a look at that. Big open interest built up out there. There is aggressive writing that we're seeing. The premium, I think at the start of today, had moved to around 120, 130. That's come down to around 55 rupees. So there is writing that we're seeing at that levels. On the downside, some of those put writers, they are packing their bags. They're moving out. The 25,450 put big open interest shedding is what we're seeing at that particular strike as well. What does this mean in terms of levels? I think the market's the near-term reference mark comes in at around 25,150. That's the level that we highlighted at the start of this week at a bit of a resistance zone. We crossed that mark, so that becomes the first level of reference on the downside. On the upside, going by the options data, 25,550. Well, that appears the level that the bears, they want to come in there, they want to fight for that particular level. Moving to stocks then that we are tracking, Vodafone Idea, that's the one that in fact did see a lot of short built up out there. That's coming for a bit of a short covering bounce as well. So, that one should come up for you on the screen. Your Pyramid Pharma, there is some fresh buying that we're seeing on that particular counter. So that as well comes up for you on the screen. Good amount of buying on that name. And, stocks that could potentially move in and out of the band. Let's highlight a few of them. Saman Capital, well, that one is seeing massive open interest build up today. The last time I checked, going by the file, it appears that this is a stock that's going to move into the F&O band. So I'm going to keep an eye out on Saman Capital. By the end of today, when you get that file, that could possibly be a stock that moves into the F&O band. And RBL Bank, I'd mentioned yesterday, it was on the edge now with regard to coming out of the F&O band. It appears today, by the end of today, that's going to be a stock that could potentially come out of the F&O band. The shorts in the system are getting a little bit nervous on this name. So RBL Bank is a stock that I'll be looking at.
Thank you. For that, we will slip into a very short break. We'll come back with the closing.
Welcome back here, tuned in to Closing Bell. Well, Sanjeev Goenka, the chairman of RPSG Group, spoke to Shireen Ban earlier today about the group's big capex push, the growing renewable energy ambitions, as well as other aspects in terms of the group. Let's listen in to what he had to say.
For the next 5 years, what we are committing to is a total capex of about 1 lakh crores, largely in the energy area. It'll go also in chemicals, but chemicals is not that capex intensive, as you know. So renewables is going to be a large part of our investment. And let me make an announcement today on CNBC-TV18. It's not only solar and wind hybrid projects that we are implementing. We propose to get into module and cell manufacturing. Our first gigawatt of module capacity goes on stream in the next 45 days. So that's something we've been quietly implementing. And in the next 3 years, there'll be 3 gigawatts of cell and 3 gigawatts of module capacity that will go on stream. We're keen to get a share of that pie. We already operate in UP, in Greater Noida, and that's one of the most successful privatization cases of power in the private sector. And it is UP's most successful utility. So we've now begun to understand how to operate in UP. And Yogi Ji's government provides a very secure law and order, and so helps a utility for sure. We're keen, and we are going to bid.
Well, interesting snippets from that particular conversation. By the way, just pull up the erstwhile ITD cementation. I think it's now known as Sempro. The intraday chart should come up for you. That suddenly has fallen off the cliff. So I think let's get the intraday chart of that one. Sem India projects, I think that's what it's known as right now. That one's moved down, it's around 6.5%. And the other one I'm looking at is Power Mech. Massive volumes out there for that sort of a counter. You know, from the highs of the day, it's seen some kind of profit taking. We'll have to see whether or not there's a large trade that has taken place, because the volumes indicate very, very large volumes just in the last 1 hour or so. But we still have Amrish Baligaus with us. Amrish, tell us that one pick that you normally give us. What's on your radar today?
Hi, Nigel. It's ABB, which is a technology leader in electrification and automation. I mean, they have 4 business segments: electrification, motion, process automation, and robotics. Last quarter, the order flow was a bit weak, and but still, the overall order book is quite decent at about 10,000 crores. Again, last quarter, they had that forest fluctuation and quality control order implementation, which had a negative effect on margins. So the stock had corrected. So it seems a buying opportunity, because the order flows are expected to improve over the next 2 quarters, along with margin expansion. And another big trigger going ahead would be the demerger of the automation and the robotic business into a separate listed entity. And I think this should happen in the calendar year 2026. So I think that should be a big trigger. Even otherwise, expected consolidated EPS in calendar year 27, I'm expecting it to be 115. And with that, my target price is about 6,325.
Okay, all right. Amrish, appreciate you joining in on the show and giving us your view on a lot of stocks that we discussed. Thanks a lot for joining. We'll keep an eye out on this one, ABB India. Well, it's been a good week for the bulls. You know, the Nifty will still go home with gains. But in today's trading session, we did have some profit taking both on the Nifty and the Nifty Bank. After 12 straight sessions of ending in the green, the Nifty Bank today went home with a cut of close to around 250 points. What took a hit from the banking names? ICICI Bank, that was down 1.5%, and HDFC Bank. So the large constituents of the index, well, they came in for profit taking. What stood out from the banking pack itself? You had IndusInd Bank, that went home with gains of around 1.2%. You had SBI Life as well, that did pretty well. But the stocks that really caught your attention today is Adani Enterprises, Adani Energy, Adani Green. Post that SEBI clean chit, well, these stocks did bounce up and trade. So good move is what we saw in all of those names. Vodafone Idea, that was the stock actually of the day. Lives to fight another day. And, you know, that's why, in fact, the street is quite excited that hopefully there could be some kind of relief that's in the offing. But that one ended high with a gain of around 8%. Remember, it's not a one for the faint-hearted, but the commentary did appear in favor of them. You had a Morgan Stanley note with regard to initiating coverage on Adani Power. that stock went home at the high point of the day with a gain of close to around 13%. Other stocks that did well, NetWeb was up close to around 8%. You had Adani Total Gas that was up 7.5%. The Adani Group stocks actually did quite well. Hind Rectifiers, they've done that acquisition in Europe. I think it was a company under distress. So that stock, in fact, does go home with good gains even in today's trading session. So all in all, the bright spot of today was that the mid-cap index was in the green. The headline indices did come in for some profit taking, and a lot of stocks were bobbing around. Anantaraj was a stock that went up with gains of around 9%. Trigen Tech, a stock we don't talk about very, very often. That one as well, circuit up close to around 20%. Well, we'll wrap up on this edition of Closing Bell. You stay with us. Editor's Roundtable comes up next.